Welcome to the GFU Forex trading course.
The upright cup and handle pattern is a chart figure with bullish potential. The pattern could appear after a price increase or a price decrease. Of course, the pattern has its bearish equivalent, which is the inverted cup and handle. We will discuss the inverted pattern later as well. As we can see on this chart, there are two patterns that make up this formation, and they are the cup and the handle. As we can see, the cup is formed when the market shows signs of bottoming, as it has bounced off the lows and is making higher highs towards the resistance. Also, the handle is formed when a tight consolidation is formed at the resistance zone. It is important to remember that the pattern could act as a reversal or continuation signal. This depends on the previous price move to the pattern formation. We could have a bullish cup and handle after a bullish price move, in which case the pattern will be considered a continuation. If the bullish cup and handle comes after a bearish price move, it will act as a reversal pattern. As we can see in the structural formation of the cup and handle technical pattern, the price formation is called the cup and handle pattern because this technical pattern actually resembles a cup with a handle on the chart. How can we detect this pattern on the trading chart? The market has shown signs of bottoming as it makes higher lows towards resistance. Next, we need to observe how the price reacts at resistance here. This zone is important because it tells us whether there is still selling pressure around this structural level. If we see a large sell-off from this resistance back into this bearish channel, then such action invalidates the pattern, and it tells us the market is not ready to move higher. But if we notice that the price is holding up nicely at resistance, then it signals strength as it tells us buyers are willing to buy the high of this market into a more bullish rally. Finally, when the price breaks out of resistance, the cup and handle pattern is confirmed. And this suggests a higher probability of the market could move higher. Take note, the most reliable cup and handle patterns should not have a shallow retracement of the handle, which is more than 1/3 of the cup formation. How can we trade the cup and handle patterns as a pro trader? To make an entry on the cup and handle pattern formation, we must ensure price makes a decisive bullish close of the bar above the handle. Although, there are three ways to approach this trade entry. Number 1. As an aggressive trader. This type of trader would place a buy stop order to catch the breakout of the pattern. Number 2. As a conservative trader. This type of trader would prefer a close of the bullish bar above the resistance of the handle before placing an entry. Number 3. While the extra conservative trader would prefer an entry after a retest revalidating the broken resistance of the handle of the formation as a new support for the price. As we can see here, price made a retest of the broken resistance structure and it acted as a new support. But it's mostly like that extra conservative trader would miss out on a strong bullish trend. Where should we place our stop loss on the cup and handle pattern formation? Whenever deciding where to place your stop loss, don't set your stop loss based on your pain level. Instead, set your stop loss where the market will prove your analysis wrong. Therefore, the market would prove our analysis wrong at the bearish close of the bar below the low of the handle of this pattern formation. It's best to set a stop loss some pips below the low of the handle because the price may later trade this low of the handle and thereby still act as a support for the price. If you place your stop loss too close to the low of the handle, price may end up hitting your stop loss. Therefore, 10 to 20 pips would be a nice zone to implement our stop loss. Where should we place our take profit based on the cup and handle pattern formation? Setting take profit depends on three techniques, and which are: Number 1. Measurement objective. Number 2. Moving average trailing stop. Number 3. Key level structure objective. The measurement objective depends on taking the measurement of the pattern from the high-low swing of the cup to the brim of the cup, which is the resistance level. Then, extend this measurement to forecast the next potential move in price. The moving average trailing stop technique involves the utilization of the moving average indicator to trail our profit in order to ride the trend. Finally, the next key level zones can help us to figure out the take profit target. Remember, key level means areas of supply and demand or resistance and support levels on the trading chart. I have shown you how to construct key level on the trading chart in this trading course. Therefore, if you have forgotten how to construct key levels, which are resistance and support levels on the trading chart, it's advisable you watch and study the video once again. It's time I show you how to approach the inverted cup and handle pattern formation. As we see on this chart, there are two parts that make up this formation, and they are the inverted cup and the handle. The inverted cup and handle pattern formation technically suggests a bearish implication. We won't waste much time on the inverted version of the cup and handle pattern formation because the same approach to trade the upright form is applicable to the inverted version. As we can see on this trading chart, the inverted version of the cup and handle pattern formation led this bullish rally into a bearish rally. To trade this pattern, look out for a bearish close of the bar below the handle, which is the support. You can decide on any of the three ways to approach the trade entry as discussed on the upright cup and handle formation, which are as an aggressive trader approach, as a conservative trader approach, or as an extra conservative trader approach. Also, the best zone for your stop loss is at some pips above the handle formation. While you can set your take profit depending on the three techniques I showed you on the upright cup and handle pattern formation, which are measurement objective for take profit target, moving average trailing stop for riding the trend, or the key level structure objective for take profit target. Congratulations to you for acquiring a new trading strategy in your trading arsenal tools. Make sure you study and practicalize this pattern formation properly before implementing it for trade opportunities in the market.